Meanwhile, RBC Capital Markets lowering its rating on Enphase to sector perform. The downgrade comes against the backdrop of a solar sector that we know has seen its share of struggles this year and a surge in nuclear investments from big tech. So how should investors be looking at the solar industry? Joining us now is...
Hey everyone. Today, we're diving into Enphase Energy, a company making waves in the renewable energy sector. After a challenging third quarter in 2024, marked by revenue declines and missed earnings expectations, Enphase's stock took a bit of a hit, leaving many investors wondering if it's time to buy, hold, or sell. Stick around, because by the end of this video, you'll know exactly where Enphase stands and whether it deserves a spot in your portfolio. Plus, if you're interested in more investment analysis like this, be sure to subscribe to our newsletter. Link in the description below. Starting with Enphase's recent performance, the company reported a year-over-year revenue decline of 30.9%, totaling $380.9 million in Q3. This drop, coupled with missed earnings estimates, led to a stock price dip. The biggest challenges were in the European market, where economic slowdowns and lower power prices impacted demand. However, there was some good news in the US, where Enphase managed a solid 43% quarter-over-quarter revenue increase. Despite the hurdles, Enphase is pushing forward with new products, like its latest microinverters and batteries, to tap into emerging markets and offset European challenges. But with Tesla's Powerwall 3 heating up the competition, can Enphase hold its ground? Looking at the fundamentals, we see Enphase faced a 31% dip in revenue from last year, driven largely by a 68% drop in microinverter shipments. But the gross margin did see a slight improvement to 48.1%, thanks in part to IRA benefits. However, this gain was tempered by a one-time battery cost charge. The company also took a $17 million impairment charge that weighed down net income. One positive note, Enphase is carefully managing its inventory in Europe to match the reduced demand, a move that could protect it from further financial strain. Enphase is also working hard to build its competitive edge with new product lines like the IQ8 microinverters and fourth-generation batteries. The company's expansion into international markets like India and Brazil, and its focus on software for energy management shows it's playing a long-term game. But the road isn't without risks. Tesla's Powerwall, regulatory changes, and economic uncertainties in Europe all pose potential challenges. Enphase's reliance on IRA benefits could also be impacted by shifts in US tax policies, which will be crucial to watch as the company navigates these risks. Now moving on to the technical side. Enphase's stock has been quite volatile lately, dropping over 15% following the Q3 earnings report. It's currently trading below both its 50-day and 200-day moving averages, which signals a bearish trend. The Relative Strength Index, or RSI, is around 41, which suggests that the stock might be nearing oversold territory. The MACD indicator is also showing a bearish trend, with the MACD line below the signal line, pointing to continued downward momentum. Key levels to watch: support is around $73.49, close to the 52-week low, while resistance is near $110, aligning with the 50-day moving average. These could serve as potential entry and exit points for investors. So what's the bottom line? Let's talk valuation. Enphase currently has a price-to-earnings ratio of 82.2, which is high compared to industry peers and suggests it might be overvalued. The forward PE ratio, however, is closer to 17.47, indicating room for future earnings growth. Still, with the stock's high valuation and recent earnings miss, we'd recommend caution in the short term. To sum it up, we're issuing a sell recommendation for the next 3 to 6 months due to the short-term volatility and high valuation. However, for long-term investors, Enphase's strong fundamentals, innovative products, and expansion into emerging markets offer promising growth potential. So for those with a longer horizon, this stock could be a buy. Your investment strategy ultimately comes down to your risk tolerance and investment time frame. Thanks for watching. If you found this analysis helpful, please like, comment, and don't forget to subscribe. And remember, if you're interested in more insights like this, sign up for our newsletter using the link in the description. See you in the next video. Disclaimer: this video is for informational purposes only and does not constitute financial or investment advice. Always do your own research and consult a financial advisor before making investment decisions. Investing involves risks, including potential loss of principal.